Welcome back to Financial Fundamentals, where we break down money concepts so they actually make sense. Today, we are talking about something that happens in a lot of families and almost nobody knows how to handle. What do you do when you find out you are the heir to a relative who seemed to have nothing? By the end of this, you will know exactly what an estate really is, why broke on the surface does not always mean broke underneath, and what steps to actually take so you do not leave real money sitting on the table. Alright, let's get into it. So here's the scenario. Your aunt passes away. You loved her. She was never flashy. She rented her apartment, drove an old car, had maybe $800 in her checking account when she died. And someone in the family says, well, there is nothing to inherit, so there is really nothing to do. That assumption could be costing your family thousands of dollars. And today I want to make sure you know why. Let me ask you something first. Have you ever found a $20 bill in the pocket of a jacket you forgot about? That feeling, that surprise of value showing up somewhere you were not looking, that is kind of what we're talking about today. Except instead of a jacket pocket, it is an estate. And instead of $20, it might be a whole lot more. So let's start with the word estate. When you hear estate, you might think of a mansion or something rich people have. But in financial and legal terms, an estate just means everything a person owned at the time they died. That is it. It is their total picture, cash, yes, but also property, old accounts, rights, policies, and things you might never think of as money. Think of it like a box. When someone dies, everything they owned goes into that box. Some stuff in the box is obvious, like the cash in their checking account. But there is other stuff in the box that is less visible. And that is where a lot of families miss out. Now here's where it gets really interesting. An estate can include something called intellectual property. Let me break that down. Intellectual property, or IP, is a legal term for creative work that someone owns the rights to. Think of it like this. If you write a song, you own that song, even after you stop performing it. Even after you die, someone can play that song on the radio, use it in a movie, put it in a commercial, and the person who owns the rights to it gets paid. That payment is called a royalty. A royalty is basically a recurring payment you receive because someone is using something you created or own. Here's a real-world example that makes this click. Buddy Holly. If you do not know Buddy Holly, he was a rock and roll pioneer. He died in a plane crash on February 3, 1959. He was only 22 years old. He had almost no money. By most measures, he seemed broke, but his widow, Maria Elena Holly, inherited his name, his image, his trademarks, and the rights to his creative work. Decades later, those rights were tied to the 1978 film, The Buddy Holly Story, and continued to generate value long after his death. She also co-founded a foundation in 2010 built around his legacy. None of that value showed up in a checking account. All of it was in the box. So when someone says there is nothing to inherit, what they usually mean is there is no cash sitting in an obvious account. But that is not the same thing as nothing to inherit. Okay, let's pause for a second and recap what we have covered so far. We talked about what an estate actually is, which is everything a person owned. We talked about intellectual property, which is the legal ownership of creative work. And we talked about royalties, which are payments that keep coming in when someone uses that work. Does that make sense? Good. Let's keep going. Now I want to address something that scares a lot of people away from even looking into a relative's estate: the fear of inheriting debt. Here's the truth, and I want you to really hear this. In most cases, you do not personally inherit someone else's debts. Here's how it works. When a person dies, their debts are paid out of their estate first, before anything gets distributed to heirs. So if your aunt owed $5,000 on a credit card, that credit card company gets paid from whatever is in her estate. If there is not enough money in the estate to cover the debts generally do not follow you. You might inherit nothing in that case, but you are not on the hook for her bills. Think of it like this. If a company goes out of business and owes people money, the customers do not have to pay that company's debt out of their own pockets. The company handles it. Same idea here. Now I said generally, and I want to be careful here because there are exceptions. If you co-signed a loan with your aunt, that is different. If you had a joint account with her, that is different. And rules vary depending on where you live, whether that is a different state or a different country. So do not just assume, but the baseline, you are not automatically responsible for her personal debts. Alright, let's talk about a word you are going to hear a lot in this process. Probate. Probate is the legal process that happens after someone dies to make sure their assets get transferred properly. Think of probate like a referee. When a person dies and they have a will, someone, usually a judge or a court, has to officially say, okay, this will is valid. Here's what gets distributed, and here's who gets what. That process takes time. We are talking months, sometimes years. It depends on the complexity of the estate and where you live. Here is something really useful to know though. Not everything goes through probate. Some assets skip that whole process entirely. Life insurance policies and retirement accounts, for example, usually have something called a beneficiary designation. That just means there is already a name attached to that account saying who gets the money when the person dies. That money goes directly to that named person without waiting on any court process. So if your aunt had a life insurance policy with your name on it, that money might come to you pretty quickly and completely separately from everything else. That is why it is worth checking. Let me walk you through a concrete example to make all of this real. And I want to be clear, this is an illustrative example. I am not predicting what will happen in your situation. Imagine your aunt dies with $800 in her checking account. That is it. Family says she had nothing. But let's look in the box more carefully. Back in the 1970s, she co-wrote a song with a friend. That song gets used occasionally, maybe in a small movie or a local ad. It pays out $150 a year in royalties. Small, sure, but it exists. And you might be the heir to it. Then you check with her old employer and find out she had a small life insurance policy through work. A $5,000 policy that nobody remembered. You check your state's Unclaimed property database, which is a free government tool that holds money from forgotten accounts, and you find $1,200 sitting there with her name on it. So you started with $800 in a checking account, and you ended up finding over $7,000 in value, plus an ongoing royalty stream. None of that showed up in her bank balance. An heir who assumed she had nothing and walked away would have left all of that behind. Okay, before we wrap up, I want to ask you something. What is the one thing from today that surprised you most? Think about that for a second, because whatever surprised you is probably the thing you would have missed. And that is exactly why this stuff matters. Let's talk about taxes for just a moment, because I know the word tax makes people nervous. Here is the good news. In the United States, the federal estate tax in 2024 only applies to estates worth more than roughly $13.6 million. So for most everyday families, the federal estate tax is not something you will deal with. However, some individual states have their own estate taxes with lower thresholds, and those vary. Inherited retirement accounts, like an inherited IRA, have their own specific withdrawal rules that are a bit different. Tax rules also change from year to year and country to country. So do not just assume you are in the clear without checking. Alright, so what do you actually do if you find yourself in this situation? Here are your practical first steps. 1. Find the will. The will is the document that says what your relative wanted to happen with their belongings. Not everyone has one, but if they do, you need it. 2. Get multiple certified copies of the death certificate. You will need these to deal with banks, courts, and insurance companies. Not just one copy, multiple. 3. Search your state's Unclaimed property database. This is a free government database. Every state has one. It holds money from forgotten accounts, old refund checks, and unclaimed insurance payouts. Just search your state's name and unclaimed property. 4. Check for life insurance and old pensions, especially from old employers. People forget these exist. 5. Before you sign anything, talk to a probate attorney. Especially if intellectual property, royalties, or a small business is involved, the first conversation with an attorney is often just a consultation. And it is worth it. You are already ahead of most people just by watching this. Seriously. Most families never investigate. They assume there is nothing there and they move on. The fact that you are here, learning this, means you are the kind of person who is actually going to look in the box. Here is the single most important takeaway from today. Cash poor does not mean asset poor. An estate is everything a person owned, and some of the most valuable things a person can own are invisible in a bank account. If this video helped you, hit the like button. It genuinely helps this channel reach more people who need to hear this stuff. And if you know someone dealing with a family member's estate right now, share this with them. It might be the most useful thing they see this week. And if there is a money concept you have always been confused about, drop it in the comments. We go through every comment, and your question might become the next financial fundamentals video. This video is for educational purposes only and is not financial advice. Markets and investments carry risk. including the possible loss of principal. Always do your own research and consult a licensed financial professional before making investment, tax, or money decisions.